Hi, and welcome back. It is the 23rd of June, Monday, kicking off the week. I want to cover a couple things, just my thoughts on the Group B here, Group B distributions from a percentage basis in terms of how the fund performed on a function of what the distribution was, and then considering that to what the current price of the ETF is. Looking overall, it looks like Murni was probably the best actual performer. Of course, that ETF's been dismal, but trading at $2.22, that's at least a recent price. You see the 19-cent dividend is actually an 8.54% return. For those who bought into the fund recently, that was a pretty good distribution. And then let's see, Maro, we had 6%. GDXY was at 5.59%, so that one's actually pretty good, pretty high relative to past performance at least. And then you have Palantir just at that 5% range. 5% is always, I think, good in my book. Of course, when I say that every fund has its own estimation for where it should be based on the implied volatility of the underlying equity. But I like to always think 5% is really good. Anything like over 2 to 5% is probably standard. And then anything under that's not very good, or you own a fund that doesn't have a lot of volatility in it, so you really shouldn't expect that much. But Palantir has been really stellar, almost at the 10% range. So at 5%, kind of good in my book, but probably less than what people are expecting. And the video was at 4.25. It had a very good week, I think, last month. So that's 67 cents, was definitely lower than where it has been. Then Facebook 3%, 2.3%. Babo 2.85. That one really stands out as being quite low. And then JPMO at 1.69%. Of course, that's a lower volatility ETF, so I suppose one could say that. And then I guess one other thing, so there's Group B. And then if you hit this all button here, okay, and then I just want to take a look. If you take the recent dividend for all of the monthly single underlying equity ETF funds, and I suppose if you do a filter based on percent return here, just to see what fund has been paying the most, the absolute most. Like I said, we had Murni here at 8.54%. That was a Group B pair. Previous to that, looks like Carvana was the best in terms of percentage at 10.68%. Then surprisingly, XYZ, Block, Square, however you want to know it, was actually second at over 9%. Then Murni, and then here's your Coinbase at our CONY at 8.21. That one is coming up next week, so that'll be an interesting one to see where it goes. It's a widely held ETF. So it'll be interesting to see what that one pays. A lot of people following that one. Then you got Misty, you got AIYY, Snow, Misty, one of the most held funds, 7.15%. And then some of your other ones, PLTY, as noted, is at the 5% mark. That one's usually the top of the list. Surprised to see that one more of the middle of the pack here. But as far as your kind of low volatility names that really aren't paying that much, you got JP Morgan, Exxon, Apple. Babo, a surprise. I expect that one to be a little higher. But then Microsoft and then Ybit also, I think that the volatility on that one would put it above Google, Netflix, some of these other ones. But yeah, that's an overall look. Some of the payouts haven't been quite as good as the previous month, just to note that. But that's an overall look at how the YieldMax funds are paying. And then here's kind of an updated chart as far as what the market caps are. You got Misty here. Looks like, are they up to 4.6 billion in the market cap for the funds? Quite large indeed. Then Nvidia is second, not even half that at 1.67 billion. And then we got CONY, as I said, a widely held fund, 1.3 billion. So yeah, those CONY at 1.3 billion, and then Tesla 1.1 billion or 1.14 billion, and then Palantir, the PLTY is 660 million. And then as you can see, all the other funds are a fraction of the major funds. So that's just a market cap look where the focus of these funds are. Change the graph up a little bit. I put the date in here, 6/23/2025, so you can see when those last updated by. This chart I don't update all the time, but the date down here will definitely allow one to see how recent that market cap stance is. And then, so Group C is coming up. And of your Group C ones, you got CONY, PayPal, Netflix, Microsoft, AMDY, Carvana. I believe Robinhood's, or let me just check here. Yeah, Hoods, or HOOY, is also coming up. I got to add that one in here. That's a somewhat newer fund. I have the data. I just add it here. So I usually wait till there's been like 2 distributions, so at least you can compare them on a relative basis. But I guess with that said, with CONY coming up, I did update the CONY kind of in-depth look at what the fund is currently holding. So CONY had a pretty good week last week. If we look at the price here, maybe we'll go to Yahoo Finance. Coinbase in general had a pretty good week. So therefore CONY did too, and they had their options set up that they did have a decent insurance percentage on the upside and as far as selling the credit spreads. So they did participate in a lot of the upside. So if we go and take a look at it's not really loading very fast. Yeah, here it is. Sorry. So on a 5-day spread, you can see they're down to 784 and they bounced back and they're above 9. So CONY did experience some of the appreciation that the underlying Coinbase stock had based on how its options were set up. But I guess going into this week, or I guess overall, so what does that lead to? So you can see the market cap of the fund shot up quite a bit last week. But as far as what the components are this week, once again, this is how I like to look at it. Open your suggestions if something's better. But the way the fund is set up, if you go and open up on their website what the fund holds, you can see primarily they got everything or a lot in cash or government securities. And then they got their synthetic, and then they got the contracts they sell against the synthetic, using the synthetic as collateral. This doesn't mean too much to me because it's in terms of total value, but on a per share basis, you can see CONY was at 9 and the $8.94. Basically, he's in cash. And the synthetic right now is at 25 cents, and the other contract sold against is at 27 cents. So assuming none of the contracts would hit their strike, which based on how they're set up right now is probably unlikely, but you could see the fund would potentially increase by 27 cents on the week. As far as what they have for insurance, so they got 44,000 contracts or 44,450 contracts sold. Some of those are credit spreads. The upward call on the credit spreads is at 20,780. So it gives an insurance percentage rate of 47%, which means if CONY really shoots up, about 47% of the position will capture gains at that higher, where those higher strike prices are bought at. And here's a look on where the actual strikes are. So this red dotted line where the synthetics established. The black line was where I last clocked the stock price. Slightly higher right now. But you can see they got a lot of the contracts at the 300 and the 305. So the stock price currently is past that. So we've already capped out some of the gains as far as the fund's concerned because we've already gone over those calls that we've sold. So any of the gain in the synthetic is capped out for these contracts here. But then we also got the 310, we got the 327, and we got the 332 where contracts are sold. The size of these lines represents the number of contracts. But then as far as the insurance upside, we start capturing gains again at 325 and 340. And I think that was like at a 47% rate. So that's how they're structured right now, if you're looking for targets to shoot for. And then in terms of percent of the total, so this is the number of contracts sold, 22%, 22.5% at the 305 or the 300. And then 37.55% at the 305 and everything else is above. So I just clocked that out as a percentage basis. And then in terms of the market value, I have these other contracts in several different lenses you want to look at, like the total contracts sold or what the actual value of those contracts is. So here's the market value of the contracts. So clearly like something out here, you could have a lot of contracts, but since it's so far out of the money, the actual value of those contracts might not be that much. So this is just a perspective if you like to look at it. And this is the same thing just on a per share basis. So you can see right now, like if CONY or Coinbase, the underlying stock, were to finish under 305, these contracts would be worthless basically, which would make the fund, at least the portion of the fund that's considered the option premium of sold contracts, it would make it go up by almost 15 cents. And at 300, it's got about 10 cents. And some of these other ones, let's see, we got 3 cents, and then 1 cent and 2 cents. Or this is probably almost 2 cents as well. So this is where it gets you on the week for the fund if the strike's not hit. On the same lens, though, these insurance contracts are costing about 3.6% and almost 2 cents right now. So that's what you're giving up from your premium in order to try to capture some of that upside in case CONY does have a good move. On a stock like CONY, though, it has been a good strategy, I think, to have some of these credit spreads on just selling the underlying equity. These are a couple other just views that you can take a look at. These kind of show like how much the synthetic would increase in price if some of the other strike prices were hit that are sold. And this is just on a per share basis. And then hypothetically, here's where your synthetics look in based on what the underlying stock goes to. But overall, I think the main thing I wanted to point out here is just showing you where the insurance strike prices are set. So 340 and 325. Everything sold does have an expiration date of the 27th, so the end of the week. We got a lot sold at the 300 and the 305 strike, so much of the fund has been capped out already. So this week will be interesting. If CONY kind of stays where it is or even goes down slightly, I don't see much movement in the fund. And on the same line of thinking, if it goes up a lot to an amount less than 325 or 340, I also don't see too much movement because we're already capped out with these contracts that the stock price is already virtually buy. Just a look for those who own CONY. We'll see what the week brings, but thanks for tuning in.